In this video, I want to spend some time inside of ThinkOrSwim talking about indicators. I'll talk about my favorite indicators that I like to use with the stock volatility box models, what I like to use as triggers, the different clues I like to look out for, and how I like to set up my overall charts. This video is primarily going to be focused on the actual indicators, so I'll spend more time on the individual tools as opposed to the strategies. In the next video, we're going to take all of these different puzzle blocks that I'm talking about and bring that together to talk about very specific strategies that you can use to trade with the volatility box models. Now let's start first with my favorite indicator, which is the edge signals indicator. The edge signals indicator, I'm going to hide every other indicator for right now and remove our models just so our charts are nice and clean, and you can see exactly what the edge signals indicator is. The edge signals indicator plots these green and red arrows that you see on our chart. Think of the edge signals as the RSI on steroids. It's incredibly useful for really a variety of different things, and I'll show you some examples. So first off, let's come back in, and I'm going to bring back in our volatility box models, and I'll use the liquid tickers even though I could use any one of the indicator files we have. Now with the models that we have loaded in, you'll see that the edge signals is phenomenal at helping confirm when price is officially in either oversold territory or overbought territory. Now this wasn't a real breach, but overbought is a red arrow, oversold is this green arrow. When price crosses our volatility box models, after that, if you see this green arrow, that tells us that we're now officially in oversold territory looking for a reversal. Contrast that with the flip side, which is if price were to rally in the upper models and we saw a red arrow, that would tell us that we're now officially inside of overbought territory. Even price, volume, all clues, buyers, sellers, everything is signaling to us that we should see a reversal, and you see exactly that inside of Apple here. So breach of the models and the edge signal is your first setup when we talk about strategies that we'll discuss, which is what we call the fade setup and is our bread and butter setup, the simplest setup that I think you could take a look at. It's about as easy to read as possible. Just look for price to cross our models, look for these green arrows, and that's your sign to enter. Now, a lot of times you may find that you want to add more confirmation signals. So why or how do you do that? Well, you can do that with things like momentum or the market pulse or even the Keltner channels. So let's start with each one of these, and I'll go from the top here first. So first off, we have the Keltner channels. If I was to load in the Keltner channels, and this is a very simple indicator, whenever you see these little wedges plotting on your chart, these little bird-like wedges, that's telling you that price is closing outside of the 3.0 Keltner channels to the downside. So if I was to load in our Keltner channels here, and you set the Keltner channels to 3.0, click apply, you'll see that you have these birds plotting our Keltner channel wedges whenever price closes outside. And all that's giving us is this clue that price is likely to revert back to the mean. So that's our clue. We don't see that happening inside of the models here, but whenever you do see the Keltner channel wedges overlapping inside of the clouds prior to this edge signal arrow, that's often a sign of a V-shaped reversal. Here's an example of that in after hours activity. Not a great example in terms of liquidity, but gives you an idea. You can see price closes outside of our Keltner channel wedges. We then see the oversold confirmation signal, and boom, you see the rip up higher. So that's what we're looking for with the Keltner channel wedges. Now the next piece, or the next indicator we have, is the momentum cross. This is a very simple indicator which helps us understand when is momentum switching using the 3 EMA and the 8 EMA. Whenever price or 3 EMA crosses above the 8 EMA, you'll see this blue cyan dot. Whenever price crosses, or whenever, the 3 EMA crosses below the 8 EMA, you'll see this pink dot. So it simply just tells you whenever the EMA crossovers are happening, but you'll find that there's a lot of clues here, especially when you eliminate the noise of the lines. When you look at these dots, it makes this much, much simpler and easier to read. So let's come back to the same Apple setup we've been studying. breach of our volatility box models, we had the edge signal once, twice, and 3 different times. And after that, notice when that momentum switches. You see the 3 EMA crosses above the 8, and now momentum is starting to transition. Now, of course, it's not without a fight in this case from the opposing party, which are the sellers. And you see that here with this pink dot. A very weak fight, though, only lasted 1 bar, and this is 2 minutes. So the sellers really, after the buyers had strength for 1, 2, 3, 4, 5, 6, 7, 8, 9 bars, so nearly 18 minutes here, sellers only 2 minutes before you see the bulls come right back in, ripping higher. And now you have this tug of war between the buyers and the sellers. And you can see that very easily with just these simple momentum cross dots. So that's how you use the momentum cross. It helps you understand when is momentum accelerating and when are the opposing side, in this case the sellers, putting up any kind of a fight. The final indicator that I like to have on my charts is the market pulse. We've been talking about the market pulse a lot in this video, but see how the market pulse on an intraday basis is also useful. So far, when we talked about the market pulse inside of the platform, all of these market stages were off of the daily time frame. Now I'm loading in that same market pulse line. This is that VMA line with the same colors, but this time I'm doing it on an intraday time frame, all with the idea to see the same exact clues that we were talking about. Very easy to see. That's for most of the day here inside of Apple. Bearish market pulse, red market pulse. You can see the first time that market pulse transitions to green right here. The first time we transition to a market stage of acceleration, and after that, you can see market stage goes back and forth. Another time we go into acceleration, another time, and after that, really no looking back. A nice rally into the close. So let's piece this together before we spend time in the strategies with all of the indicators we just discussed, because to me it tells a beautiful story that you can really make sense of. This all starts, first off, with our volatility box models. We only care about any of these trades when we have a volatility edge. That's step number 1. So whenever it appears on our live scanner, we can now jump inside of ThinkOrSwim and dive into a little bit more detail. I'm looking to see a few things. What do these breaches look like? Are we quickly tagging in and out like this, or have we breached and now penetrated the actual models and we're starting to chop around inside of them? The first clue you'll typically see is the overbought, oversold confirmation, which is what we see here. If you see these Keltner Channel wedges happening or forming before you see this, that's your clue that, hey, you might see a really nice V-shaped reversal here. In this case, we didn't see that, but we still saw a really nice reversal into the close. Now, after the edge signal, you'll typically see momentum shifting. That's the 3 EMA crossing above the 8, and it's not without a fight from the other side, so you get to start to see this back and forth tug of war. If the trend is really strong, you'll see that there's no tug of war, and really oftentimes you don't get a chance to look back. Those are oftentimes also supported with those Keltner Channel wedges where you have that V-shaped reversal. In this case, we had the back and forth, and you can see that with this pink and cyan dot. Then you'll start to see the actual trend give you clues of reversing. So if you take a look at Apple here, for most of the day, you can see the trend was telling you very clearly we're in this bearish market pulse stage. If you zoom in, you'll see that the market pulse gives you the first clue of transitioning here, and then it starts to flash green and then continues to stay green. The closer you are to the market pulse, the better and likelier you are to have this likelihood, this shot, this probability of riding the trend versus being far away from the market pulse and taking an entry there and trying to get any sort of move. Only looking for things like a first pullback or second pullback at that moment. Now, once you have all of these indicators loaded onto your chart, you can save this as a set or a style. The difference between a study set and a style is a style will save all of the other chart settings you had as well, including things like the time frame, if you changed the chart type, if you changed anything else of your chart settings, things of that nature. If you only want to save the indicators as a set, just save this as a set. And as long as you save this as a set, when you go to update the models every single week with the indicator generator here, for all of the symbols that you have, you'll be able to overwrite the symbols and maintain all of your study sets. If you want to save this as a style, come into Style, click Save Style. Let's say hypothetically save this as our stock VB onboarding style. Make sure to select Include Patterns in Study Set. Click Save. And now you'll be able to simply, in one click, load in that style and be ready to go with all of your settings pre-configured, your indicators all loaded on, and everything is just working for you. Now, towards the end of this video, we definitely started talking about setups and strategies, but in the next video, we're going to dive into them in a lot more detail. We'll slow down the pace a little bit, and we'll talk about ways that you can now combine all of these indicators and tools to work for your particular trading style. See you in the next video.